Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday morning pre-market webcast. Okay, so daily chart here, and you can see our old friend 2267.5 came into play once again yesterday. It marked the high. If you recall, that's the pre-FOMC price, and it's been, it was a range high for us. We were in that 2247 to 2267-ish range for the majority of the back half of December. The bears, after a fairly promising start, at least from Friday's low, down at 2228, basically served it up to the tune of about 40 handles. Gave up weekly pivot, gave up the daily mid-band, a lot of the ground that they had fought over on Friday, and took it all the way back up to 2267.5, where it met with resistance. So as we head into Thursday, a couple of things. The bulls are only going to get so many chances here. You're only going to get to go up to 2267 to 2273 so many times before this market just says, you know what? It can't get over the top. The Bollinger Bands are pretty tight. So why don't we go ahead and just expand to the downside and go say hello to some of these, some of these areas closer to 2200 and see if there is a legitimate higher low to be found, versus the election low. On the other hand, I have a very difficult time taking the bears seriously at all if they can't convert daily mid-band and the weekly pivot down at 2244 or 2245 on a closing basis. That means they get down below it, they close below it, and then they follow through on the following day, and they spend some time below it. Kind of like the bulls are spending time, they spent the last couple of days above the weekly pivot. We opened up yesterday. Let's take a look at our hourly chart. So, we open on the low. The opening print in the regular session was, I want to say, 56.25. It was basically your low of the day for the regular session. They take it up to, as high as 67.25, 67.5. And, the whole day was spent just kind of grinding higher. The bears were never really in the picture. There was no pullback during the course of yesterday that made you say, well, maybe. Never got to that point. So if the bears are going to make some noise today, they need to do what they're doing now. They've held 67.5 overnight. They have held 62, which was important for me. And now they're breaking, they're trying to break below and hold below the daily pivot. If you take this all the way down to a 5-minute chart, you can see this is your daily pivot. It's broken below. It's gone up to test a daily pivot. 5-minute mid-band, daily pivot, trying to be resistance. If that can hold on and they can make a lower low, then you can start to talk about a move back to test, say, 56. But I'm not going to get serious at all about the bears' chances for more than an afternoon or so until it can close below the daily mid-band, which comes in today around 55, and then you see the weekly pivot down there in the 45 area. They keep allowing higher lows and higher highs. Okay, but now that it's hit 67.5, bears have an opportunity to push back. The question is, what are they going to do? So if the pattern of the market continues, we're going to get a morning opportunity here, either as a dip buy or a rally sell. If we pop up off the open and daily pivot continues to contain things, I like that as a sell for a move down to test the 55 daily mid-band. If we continue to progress down and we open up around the daily mid-band and it can't get through 54, 55, then that's an area that I would be looking for dip buyers to come in and push back up into the 62 area. All right, everybody have a fantastic day. That's all I got. Follow us on Twitter at Princeton Trader. Come check out our website, Princetontrader.com, and come take a free trial in our chat room. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.